Hey guys, what is up? Faz here. In this video, I will teach you about the ICT Judas swing, how you can trade it and make profits. You guys might like every day new single trading strategy. The thing is, guys, I'm teaching you each and every single concept that I know, ICT concepts, okay? And most of the strategies on this channel are not different strategies. They are just a different variation of each strategy, okay? So without further ado, let's get on with the video. So what is a Judas swing? So Judas swing is a fake move before a move to the original direction. So let's assume that you have buy side and sell side liquidity resting. So price takes out sell side liquidity. That is a Judas swing. And then you get a market structure shift. You take your entry and you target the buy side liquidity, the original direction, because our narrative, our bias was bullish. Okay, so here are the rules that you can use. I'm going to give you the exact rules and exact timings. Okay, so number one is identify 15 minutes auto flow. So what is an auto flow? It's basically a trend. Are we in a bullish trend or are we in a bearish trend? So how do we identify a auto flow? So if the price is continuously respecting bullish auto blocks and bullish fair value gaps, then that means that the price is respecting the bullish auto blocks and fair value gaps, which are called PD areas, premium discount areas. And that gives us a sign that price wanna keep on heading higher. Okay, because it is respecting the bullish auto blocks and fair value gaps. And similarly, if we have price respecting bearish auto blocks and bearish fair value gaps, then that means that the price want to keep on going lower. So how do we use Judas swing with this? So number one rule is identify 15 minutes auto flow. So let's say if the auto flow is bullish, okay? Let's say if the auto flow is bullish. Number two is then we identify sell side liquidity before 8:30 a.m. New York time for Forex and before 9:30 a.m. for indices. Okay, so here's the thing, our midnight open is at 12 a.m. right? And then you have, so I'm going to give you the example for Forex, okay? So at, let's say, 8:30 right here, I'm just giving you, okay, perfect, like that. So this is the midnight open. This is the 8:30 open, right? 8:30. So we identify sell side liquidity when the auto flow is bullish, when our bias is bullish, okay? And if our bias was bearish, we would identify buy side liquidity before 8:30. I'm giving you the example for Forex, okay? For indices, you would look for liquidity before 9:30, okay? So this is, you know, like the midnight open. Then we have the 8:30 open for Forex, and our trading window is till 11:30, okay? So we only have a trading window period from 8:30 till 11:30 for Forex, okay? So trading window period is from 8:30 till 11:30 a.m. New York time. Okay, so this is the only time that we can trade in this window period. Okay, so here's the thing. Let's say that we have been bullish, right? We have been respecting PD areas and all, and now what we do have is a 8:30 open here. We know that we are bullish, right? So you want to mark out liquidity levels, a structure, you know, it could be a significant low, it could be equal highs, it could be just a, you know, like a minor structure. I wouldn't say. So what is the structure that you should not look for when to identify liquidity, right? So this is liquidity, but if you have something like very tiny structure like that, it's best to avoid this, okay? A very little pullback, a very little small low, then that isn't a significant liquidity level. And we must be looking at the liquidity levels on 15-minute time frame. Okay, so let's assume that this is the prime like liquidity example. This is like a significant low here. So primarily we want to look for sell side purge of sell side liquidity after 8:30 because our narrative is bullish. And one more tip that I would like to do, so let's say you're looking at 15 minutes, right? If you go to the 4-hour time frame, you might notice that we might have like a structure, a higher time frame liquidity level. So if this level is still valid, if the price has not taken out this 4-hour time frame, higher time frame liquidity level, we can expect to be bullish. Okay, let's say if price took out this liquidity here, then you can expect lower prices or a shift in market structure. We could be shifting from bullish trend to a bearish trend. This is how I use this thing. Okay, so then when we have the liquidity marked out after 8:30, we look for a purge of that liquidity. So once the liquidity is taken out, we drop down to 1 minute or 2 minutes or 3-minute time frame. Okay, and we look for a market structure shift with fair value gap and displacement. Displacement is very important. You see a sudden move to the upside, leaving behind fair value gap. And then what you simply do is you take your entry from the fair value gap and you target the lowest hanging fruit. So there could be a fair value gap here, right? There could be a auto block here, and you want to just target that. Or you can take some partials at these levels and you target this next level, liquidity level. Okay, so most of the time what's going to happen, price is going to tap into your entry zone, and it's going to maybe reverse from here, maybe give you a pullback, then hit this level and then take out this liquidity, and it could actually just go ahead and take out this liquidity here as well. So this is the strategy, guys. It's really that simple. You just want to, you know, after liquidity sweep, look for market on lower time frame and take your entry. It's really that simple. So I'm gonna give you guys a couple of examples and then I will end the video. All right, guys, so here is the example number 1. I'm looking at NAS 100 and I will be using the 9:30 open because we're looking at indices. So you can see that the order flow has been bullish so far, and we would be looking for a purge on the sell side. Okay, so this is the, let me annotate it. So this right here is basically the 9:30 open, and we have these equal lows here now, so that is perfect. So we wait for price to take out the low here, which happens right there, perfect. Then we drop down to 1 minute and we look for a clean market structure shift. This right here was not a clean market structure shift because we have consolidation and then we have a push up, so that is not perfect. We want displacement, right? So as a trader, you must know that this is not a clean market structure shift. Okay, and any trader would notice this. I'm not just saying this for the sake of this video. You can see this is consolidation. If primarily I want to see like 3 to 4 bullish candles break the structure, which is displacement, right? So we wait, we have, so this is what I'm talking about. Do you see this, right? This bullish move, it's like a displacement, right? So now we have fair value gap right here. And if we take my entry from here, put my stop right there, target, I don't know, 1 to 2. Let's go for 1 to 2 here. And we are targeting basically this high here. So let's see how this plays out. And as you can see, the take profit was hit. We took out the buy side here, and that was a perfect trade. We respected this auto block here. We respected this fair value gap here. We took out these equal lows here, right? We had a, you could say, a liquidity sweep here as well, but then this displacement was not, you know, like this was just consolidation here, and then we had this push up here. So basically that became a liquidity level as well, because this was consolidation. So we had a, you know, a accumulation, manipulation, and distribution here, but then our higher time frame was like accumulation, manipulation, and then distribution. So let me give you guys another example. All right, guys, so I'm looking at EURUSD on 15 minutes time frame. You can see that the order flow has been bearish for the last, I don't know, 2 days or so, and we want to look for a purge on the buy side liquidity. So we mark out buy side here as well. We do have this is the liquidity level right here. So, oh my god, my bad, right there. We have these like equal highs and like, you know what I'm saying. So we are at 8:15. I'm looking at Forex now, so we're gonna use the 8:30 open. And as you can see, right off the bat, it was news here, but news took out liquidity here as well. So when you have a buy side liquidity, you can drop down to like 1 minute time frame now and look for a market structure shift. And let's see, where do we get it? Okay, perfect. So we have higher high, higher low, higher high, and then we have this beautiful displacement right there. And we have a market structure shift, leaving behind this fair value gap here, right? And this is fair value gap here as well. We would take our entry from the fair value gap there, put our stop right at the high here. We can target maybe this high, or actually I would target, sorry, this low, or we can target this low here, or primarily you can see that this fair value gap is filled as well. So this is the low that we can look for, because after that, this is like big fair value gap or inefficiency, whatever you want to call it. And so let's see what happens. We get our entry at 9:14, and let's see what happens. And we hit our take profit level quite nicely. So basically, this is how you trade the Judas swing. We have a move up, right? We had a news. We took out all the buy side liquidity that are marked out, and you can see we had this clean displacement here, leaving behind this extreme fair value gap. We tapped into it. Look at the precision here, and then we dropped down below. So yeah, guys, this was the whole strategy. You can go ahead and back test it. And yeah, I hope you guys did enjoy this video. If you would like to learn more, you can join the community and you can join the course or mentorship, whatever you want to call it. But it is not necessary. Yeah, I'll see you guys in the next video. Goodbye.